Wages are rising by 8.3% per year, so how will this affect the Oxfordshire property market? This week's article. As they struggle to meet demand, Argos have had to increase the wages of their HGV drivers from £11.41 to £15 an hour, a rise of 31%, meaning their pay goes from 27k to 35k. Care home providers are offering signing on bonuses of many thousands of pounds to entice nursing staff away from their competitors, and new homes contractors say labour costs are growing as the housing boom pushes up demand for bricklayers and joiners. Restaurant chains, coffee shops, blue collar workers in factories and warehouses are seeing wages rise at an extraordinary rate. The average wage for a worker in Oxford in full-time employment is £660 per week before tax. We can all argue over the reasons behind it. Some suggest the B word, ending in exit, whilst others put it down to the pandemic and some the demographic changes of the UK population. So before I look at what it could do to the Oxfordshire property market, let me look at why the wages are actually rising. And you will actually note that all of the above inflation wage increases are in the blue collar industries. Blue collar workers actually refers to any worker who engages in physical or manual labour such as building, hospitality, maintenance, etc. Whilst white collar workers are those classed in the professionals and service industries. So what are the reasons for these wage increases? One, in the past, the demand for inexpensive blue collar labour has been fed by a steady supply of Eastern European workers since 2004. Yet with the B word that has now ended, number two, also, even in late July, the furlough scheme has kept 1.9 million Britons from their jobs. Number three, fewer Generation Z, those in their late teens and mid-20s who normally would work in the hospitality industry are not working at the same rate they actually used to when compared to before pre-pandemic. Number four, finally, there's fewer baby boomers, those who are born before 1965. Less of them working since the end of the first lockdown. So how could these wage increases affect the actual Oxfordshire property market? Well, white-collar wages since the turn of the millennium have risen in real terms, yet blue-collar wages have remained stagnant, although they started to pick up slowly just before the pandemic. So, if all blue-collar workers are now seeing a substantial increase in their real wages since the pandemic, what will this mean specifically for the Oxfordshire property market? Well, after quite a bit of research, it would mean the following. Number one, continued reduction in unemployment. Two, growth in consumer spending. Three, rents will continue to rise in the short term. And four, rise in home ownership in the medium term. Starting with unemployment, 635 Oxford people have come off the dole queue in the last 12 months alone, reducing the unemployment rate by 0.7% to the current 4.6% in our local authority area. If wages continue to grow for everyone, that means unemployment will continue to reduce. Secondly, these pay rises will start to burn holes in people's pockets. We should assume those people with the extra cash, they'll actually spend it. In fact, it is a recognised trait in economics that blue-collar workers tend to spend a lot more money of any increase in disposable income when compared to white-collar workers. This would give a boost to the retail, hospitality, leisure and travel industries very, very quickly. So Oxfordshire rents are already 5.3% higher than a year ago. And if wages continue to grow, then rents, they're actually going to increase even further. This is because rents in the private sector tend to rise in line with wages rather than the actual property prices. This is great news for Oxford buy-to-let landlords. Next, if wages for blue-collar workers continue to grow, I believe we will finally see a long-term growth in home ownership again. In 2008, 68% of people owned their own home, yet that had been slowly reducing over the 2010s to 63% in 2018. Yet since 2018, this has increased slightly to 65%. The Brits who had the biggest problem jumping onto the property ladder were not just the 20-somethings, but also the middle-aged blue-collar workers. With blue-collar wages stagnant over the last 2 decades and accelerating house prices, it was much tougher for them to save up a deposit for a mortgage. Yet, With the government's recent 5% deposit mortgages and more disposable income because of the wage rises, some might actually decide not to spend the extra on going out and holidays, and they might actually buy their first home instead, because most people want to own the place where they live. If they can afford it, then they will buy. Overall, if this increase in blue-collar wages is across the board, then this could be, in my opinion, one of the greatest things to happen to the Oxfordshire property market in a very long time. It is certainly long overdue, and since the millennium, wages at the bottom end of the pay scale, the blue-collar workers, have deteriorated, while the professional white-collar middle classes have done much better. The disparities between both classes, workers, are both imbalanced and harmful to the economy and society as a whole. But what is the real story behind the actual headlines? Well, one school of thought is that some fear these wage increases will fuel hyperinflation, and in turn interest rates will have to rise to counter that. As I have mentioned many times in my articles on the Oxfordshire property market, the last thing we need is a rise in interest rates, as the mortgage rates will increase accordingly. A rise in interest rates will put a massive brake on the Oxfordshire property market, which is not good for anybody. I hope this article has been helpful. And also we have to remember a few other things. There are still 1.9 million people on furlough, which stops, thankfully, or not thankfully, at the end of September. Not all of those people will go back to their original jobs, meaning they will need to find a new job. So the pay pressures could just as easily diminish as employment bottlenecks when they actually clear. Also, the 8.3% wage rise is based on year-to-year figure, i.e. a snapshot of now versus a year ago, and therefore the headline figures have been profoundly distorted by the large numbers of blue-collar workers on furlough in 2020. They were on 80% pay. The Office for National Statistics have gone on record saying that, accounting for some of the distortions caused by the pandemic, real wages for blue-collar workers are more likely 3.5% up. Finally, as with all things, the devil is in the detail. The newspaper headlines reporting that overinflated pay rises this spring are true. However, in truth, of course, we all know that bad news sells newspapers. These wage rises were focused on professionals with specialist skills. For example, whilst wages for HGV lorry drivers have risen by double digits, pay rates for courier drivers have remained stagnant. At the same time, wage growth for white-collar jobs is at almost zero for another year. To conclude, there are interesting times ahead for everybody involved in the Oxfordshire property market. And I do not profess to know all the answers, however, I do have my own opinions. Whether you're an Oxfordshire first-time buyer, second-time buyer, homeowner, landlord or tenant, and would like to pick my brains on any aspects to do with the Oxfordshire property market, then please do not hesitate to reach out or give me a call or send me a message. I'm always here to help. I hope this has been helpful. This is Damion from Fine & Country, Oxfordshire. Thank you very much.